accumulation. Now, one of the duties of any management accountant is, of course, to ascertain costs. So you are a furniture producing organization. At the end of the day, before you set selling price for your chairs, for instance, then you have to know how much has it cost me. So then that means that we must look at the cost components. So cost components, what are we looking at? We are looking at materials, material cost. Any other component you can remember? Yeah, labor, because these materials can't bend themselves. You need people, isn't it? Yeah, so we have material cost, labor, and then number 3. Overhead cost here, because you need rooms like this. So you need to pay what here? Rent. So rent are common expenses. So in terms of cost accumulations, I must teach you how to accumulate material cost, labor cost, and what here? Overheads. So we start with material. We start with material cost accumulation. Do you have a handout? Okay, so do we have a handout? Do we have a handout? Has it reached? All right. So remember, for the evening students, you have your own management accounting class with the teacher Omondi. So you can always watch later the handout. Not the handout, but video. All right. So in terms of cost accumulation for materials, this is what I want us to read, just very few things, and then we get ahead rolling. These are very easy topic, very easy topic. So if you go to, it is not numbered, but you'll be able to see, yeah, topic number 4, cost accumulation among the last pages. Topic number 4, cost accumulation, direct material cost. Direct material cost. Have you seen the handout? All right. So, of course, these notes are highly summarized, but they'll be able to help you to pass your paper highly. So, introduction to material costing. Anytime we talk of material costing, we are concerned with tracking and valuing material usage. So, as a management accountant, once materials have been delivered for purpose of production, you must track them. Otherwise, remember, like in Kenya, we are told about 65% of employees go to their workplaces every morning with an intention of stealing. So does that mean that if you are 20 here, you account 1-1? We shall overcome, isn't it? So if you don't track those materials for sure, at the end of the day, you will sustain huge losses. And remember, a management accountant, you're supposed to be a good controller. So you must be able to track this material usage. And then at the end of the day, then we are looking at what we call the valuation of the same materials. So remember that direct materials are directly traceable to products. That's why we say that direct materials are also known as what? Or other direct expenses are also known as variable expense, because they relate with the number of units that you produce every other time. The more the materials you produce, the more the units you produce, the more the material cost. Objectives of material control. Would want to control materials, ladies and gentlemen, to avoid what your stock outs. If you don't control materials, you will get yourself with zero materials, and yet the firm in this case here has got employees now who will become idle, and you have to pay them at the end of the day. So to avoid stock outs. Number 2, to avoid what here? Excess stock. When you have excess stock, what does it mean? You've tied most of your capital to this stock. So when you tie most of your capital to the stock, of course, money has what we call opportunity cost. You'd have, invested this money elsewhere. So you don't want to have excess stock. Also, excess stock has got an effect on what we call perishability. Yeah, stock, when it's really, really excess, there is a high chance it could go bad. Yeah, ensure high quality and a timely availability. Minimize wastage and pilferage. That is theft. Essential requirements of material control system. When we have a material control system, what do we expect these system to have. Number one, we have proper purchasing system, like what they're calling what in government. Government today, they're talking of e-procurement, isn't it? Yeah, they're talking of e-procurement. So proper purchasing system, clear stock records, well-defined stock levels, regular stock taking. The companies that you guys work for, you normally have stock takes. Yeah, great. So, and some companies in this case, yeah, well, they are taking their stocks, they close shop for a day or 2 days. Do we have anybody who is working for a company? Whenever they are taking stock, they have to close shop. Yeah, so you're going to see that then you are running what we call a periodic stock control system. Great. So number 4, we have what we call centralized versus what here? Decentralized. Centralized is when we have one department, perhaps the purchasing department, which in this case here buys all the stock for all the other departments. That is central. And then we have decentralized, when in this case here, each department buys goods for themselves. That is decentralized. Ugatuzi, kama vile kuna 47 county governments. So centralized has got its own advantages. When it's centralized, we are going to put in all our resources, all our money, yeah, bulk cash, and then we procure in quantities. So you're going to enjoy what we call economies of what scale. When you have these central people purchasing, they are going to be doing this purchasing many times. That consistency, of course, will mean what here? I mean, even in terms of bargaining power, they know how to bargain. Decentralized is very flexible. We want our own materials, we buy. Quick response. Periodic inventory system, like the sister told us, she's working for a company that closes shop whenever they are counting their stocks. That's called a periodic inventory system. Stock checked at intervals. It could be monthly, it could be yearly. That's why we are calling it periodic. It is easier but less accurate for daily water control. For daily control, less accurate because you are waiting for so long for you to be able to count. In between here, of course, you expect losses. And then now we have what we call continuous or a perpetual inventory system. So continuous record of receipts and what here? Issues. So anytime we receive goods, we record. Anytime we issue, we record. All right? So then it means that you will be able to have up-to-date information. You'll be able to have up-to-date stock levels. So up-to-date stock position, which leads to what we call stronger water control, stronger control. So the second last there, setting stock levels, we have various types of stock levels. For example, we have what we call reorder level. Reorder level is when new order must be done or somebody placed. You see, ladies and gentlemen, assuming you have like 10,000 units in stock, you can't wait until all these 10,000 units are depleted 100% for you to place an order. You will go wrong. You have to in a level. Once we hit that level, we must place what here, we must pick our phone, we call our suppliers. So that particular level at which we pick our phone to call our suppliers is what we call the reorder level. Reorder level, very, very important. And then we have the minimum level. Minimum level, perhaps if our reorder level is say 3,000 units. So at 3,000 units here, we make an order. When you have made an order, still production is continuing. We are still eating onto this 3,000. You see, you reach a level which now will be the danger zone. Perhaps in this case here, your danger zone would be like how many units? Like 1,000. That is a minimum stock level. So minimum stock level is the danger level. Once you have reached there, remember most suppliers, they keep on cheating us. So they'll tell us in this case that I'm going to deliver my supplies today at 4 p.m. At 4 p.m., you try calling them Muteja. So once we have hit the danger level, now we must even think of other alternatives. For example, calling in a different supplier, or if you are shipping these goods from China, we can even consider early, because now we have hit the very lowest, the flow. So whenever we talk of minimum level, we are calling it the lowest safe balance. Then we have the maximum level. This now marks the very highest that we can ever reach. Once we reach this maximum level, we need to think of what we call overstocking. We don't want to overstock. You can overstock. Yeah, we have these models of computers and you have overstocked. Then in this case here, we have other people innovating better computers. and yet you had so many of them. So you lose terribly. Yeah. So average stock will be midpoint between minimum and what here? Maximum. So whenever you want to get average stock, you take the minimum stock level plus maximum stock level. You divide this by what here? By 2. Factors influencing stock level. I mean, what will decide in this case, ladies and gentlemen, as RCM, do we order in this case here, for example, if it's marker pens, a million of them? So factors in this case here to consider whenever, ladies and gentlemen, you are thinking about the stock levels. Number one, it's the lead time. Lead time. What is lead time? It's also known as a reorder period. The time taken by the supplier to deliver. That is lead time, delivery time. So you see there are those suppliers, when you call them, these guys will be able to deliver goods like immediately. So if they'll be able to deliver goods quite fast, do I need to keep a lot of them, or should I keep very few? If I call somebody in this case here, for example, within an hour they deliver, I will keep very few. Remember, stocks at the end of the day, it is your money, your time. Because ultimately, good organizations that are able to optimize on their stock levels are those organizations that run what we call just-in-time JIT. That we're going to be procuring goods when we need them. We procure them for immediate usage. Because we don't want to tie our money in stocks. So if we get a situation where we have got very good suppliers and maybe they are across the road here, I would rather even have zero stocks, because anytime I call them, they bring. So we want things which are fresh. So number one will be the lead time. Then we have the rate at which you are consuming. If you are a heavy consumer, then you need maduong, isn't it? Big stocks, yes. Yeah. Storage capacity. You can't tell me you want to bring a million marker pens like at RCM. Where will you store them? So storage capacity. Cost of holding stock here, we're going to see what holding cost is. Yeah. That is also very, very relevant. It can be very expensive for you to hold stocks. Yeah. And then we have here the risk of what you're becoming obsolete. If that risk is very high, then I would rather keep minimal stock, and maybe I risk running out of stocks. Now, ladies and gentlemen, the second last thing there is regarding relevant costs for inventory management. So whenever we talk of inventory management, we are going to be thinking about ordering cost. Number 2, what we call holding cost. Number 3, we have the stock out cost. Number 4, we have what we call purchase cost. Then we have number 10, EOQ. Economic order quantity is the most optimal quantity. That quantity which minimizes, once you acquire EOQ quantity every time, you're going to minimize your holding and ordering cost. So whenever you hear of EOQ, optimal means best, best order size, minimizing ordering plus what here somebody holding cost. Yeah, and they have given us a formula. So we start straight away by looking at an illustration there, and then we look at, I mean, this class is going to be the best, because after that, you can see we have 4 practice questions from our past papers, and then we call it a day. It is as simple as that. So we start with the first one, which is not a past paper question, but a very good illustration question. So this is called smart options. These gentlemen don't have the question paper. Maybe you should add them to WhatsApp and then you reshare. They don't have the question paper. They don't have that paper. It will be unfortunate. We want to involve them. The online ninjas, today I can't see many of them. We shall overcome. All right. So we are looking at an illustration on smart options. Right. So I'm reading this. Have you been able to add those, gentlemen? So we are told Smart Options Limited has been selling a product. Yeah. So we are told here, Smart Options Limited has been selling a product branded X for the last how many years? 5 years. The demand for product X for the past 1 year is as follows. So I can see months all the way to December. I can see additional information, and then they want me to calculate the reorder level. So they want me to calculate reorder level. I'm going to give you very good shortcuts of remembering this stock levels. How do we calculate these stock levels? So to calculate stock levels, ladies and gentlemen, especially what we call the reorder level, write this in full. Reorder level, you shall remember those particular suites. I don't know whether you guys got them. Yeah. Yeah. They used to be double M. Top suites. Top suites. So I don't know whether you are that kind of a person who just met, is it eclairs or whatever? Our time used to have suites. Yeah, very good. Top suites. So anytime you hear about reorder level, ladies and gentlemen, reorder level, we shall always get our reorder level by taking maximum consumption, maximum consumption times maximum lead time, That is how we get our reorder level, MM. You see this M and that M? Yeah, MM. And because they are top suites, we can't use minimum, eh? We're using maximum because they are top suites. Yeah, maximum. So then from the information given, I would want you to look for that data. Yeah, look from the month of January to December. Are you able to see the maximum consumption? How many units? Maximum. 200,000. 280,000. So I hope you guys wrote this in full. This is reorder level. So 280,000 times the maximum lead time. Go to the additional information and try searching for the lead time. Lead time is also known as the reorder period. So I don't want minimum, I don't want average, I want maximum because this is top suite. Maximum. How many days? 5. Whatever months, 5 months. So now you're able to give me this reorder level. I'm so sure there is a ninja who is writing their role. At first, you shall write in full. Reorder level. At first, we shall write there in full. Reorder level. At first, we shall write there in full. Reorder level. Reorder level. So how many are we able to get, ladies and gentlemen, here? 1.4 million. 1.4 million. Great. So there we have 1.4 million units. You write units, isn't it? Yeah, because you must demonstrate what we call broad and deep understanding of the subject. Yeah. So you're writing 1.4 million watts. Yeah. So you're doing very well. From there, ladies and gentlemen, in this case here, we go to the next question. The next question, what does it want us to calculate? This next question, what they want us to calculate, my good students, is called minimum stock level. So they want us to calculate minimum what here? Stock level. So how do we get this minimum stock level? Minimum stock level. So to get this minimum stock level, we have some language here that you must always get used to just for learning purposes. Don't take this very seriously. It's for learning purposes. So anytime they talk about minimum stock level, you always think about what here? Miniskirt. Yeah, so miniskirt. So, and this person who taught me these things a long time ago told me that that if you roll, so if you roll your miniskirt, roll your miniskirt, like that, then automatically you become average. This is just for learning, If you have your miniskirts, please do it. Do you, isn't it? Yeah. So miniskirt, if you roll it, you become what here, somebody? Average. So anytime we are talking about minimum stock level, ladies and gentlemen, we shall always take this roll. Roll stands for what in full? Reorder level. And then you say now minus the averages because you have become average. So we talk of average consumption. Average consumption times what here, somebody? Average what? Average what? Lead time or reorder period, isn't it? Yeah. This one, Mwalimu, I will never forget. For reasons best known to you, right? So anytime they want me to get minimum stock level, I will always think about that. I'll always think about that. Yeah, thank you so much. You see, average is also known as normal. So whenever you see normal or average, that is one and the same. One and the same. So let's roll on this together. So is there somebody who is able to remember the roll figure? The one we got up there, 1.4 million. So this 1.4 million minus into brackets. Into brackets, what do we have? Average. Average. Great. Mwambie ninja ingie darasa. So average consumption, look at, you have so many of them. 12 months, isn't it? That one you must get the total and then you divide by 12. Because you want average consumption. You want average consumption. Average consumption. So in this case here, we must look for the total. We must look for the total. You must look for the total. Yeah, you add everything from that demand. You know, consumption is the same as demand, eh? So you take 160,000 all the way, you add 181, 200, all the way up to 80,000. Add all of them. Add all of them. Tell me what do we have. So I want to get average consumption. I want to get average consumption. Average consumption. I want to get average consumption. So I will take total consumption. Total consumption. To average this, I divide this by 12. I divide this by 12 to get an average. To get an average. To get an average. To get an average. So I have very aggressive students online as well. They're telling me that this is supposed to be 2.4 million. 2.4 million. I divide this by 12. And they have even gone ahead to give me 200 what year? Are you able to get that 200,000? Yeah, thank you so much. So then come back to the bracket. So minus average consumption is 200,000. Do we have average lead time? What is the average lead time? Problem now, I'm talking with very, very few people. Remember, minimum is 3, maximum is 5, average is 4. So are you able to give me this answer here? $600,000. Is that correct? Can somebody confirm 600,000? Yeah, even online, they have confirmed 600,000. So do you think in your exam, you'll be able to remember this formula? No. You will be able to remember. So can I go to the next question? Can we go to the next question? Silence means consent, isn't it? So the next one, ladies and gentlemen, they want me to calculate what their maximum stock level. So maximum stock level, we roll and rock. We roll and rock. For maximum stock level, we roll and rock at the same time. We roll and rock. Roll and rock at the same time. So maximum stock level, ladies and gentlemen, maximum stock level. So we are rolling and rocking at the same. This rock is reorder quantity, eh? So you add the reorder quantity minus. So in brackets here, of course, ladies and gentlemen, because we are looking for maximum, we can't use maximum in brackets. Yeah, because we are looking for maximum, then to make this a bigger spread, inside here we shall look for what here, somebody? Minimum, yes. Minimum, in this case here, consumption. Minimum consumption times minimum, lead time, yes. Times minimum, lead time, yes. Like that. So anytime they talk about maximum stock level, we are rolling and rocking. Rocking is the reorder what here? Quantity. Yeah, and then don't forget in brackets for us to have bigger spread, we're using minimum. We're using minimum. So then do you remember our reorder level? What is the reorder level? 1.4 million, isn't it? 1.4 million. Are you able to see any quantity which every time we make an order, we always order in the question? Is there somebody who is able to see a reorder quantity? Anybody who is able to see a reorder quantity? So reorder quantity, they have told us in note number 6 that the company has been ordering how many units here? 5,000, yes. 5,000 units. That is a reorder. So in this case here, 5,000. So plus 5,000 minus into brackets. Are you able to see the minimum consumption? 80,000. So minimum consumption, we have 80,000 times minimum lead time. You see minimum, 3, eh? Minimum is 3 months. Thank you so much. So please go ahead and give me this difference, and then we roll to other things. We roll to other things. We roll to other things. $1165,000. 1165,000. And then the very last one, which in this case here, ladies and gentlemen, we have already discussed, is the one we are calling what here? Average, isn't it? So average stock level. So the average stock level, what do we have here for average stock level? Maximum plus. Did you attend my daytime class? Did you attend my daytime class today? How comes you remember this very well? So it is minimum stock level, plus maximum. That's so good of you. Plus maximum stock level. And then we divide everything by what here, somebody? By 2 years. So can they remind Mwalimu what, in this case here, the minimum stock level was? Minimum stock level, already we have done it. I can see the maximum. Minimum was, not minimum consumption. The minimum stock level we got up there. 600, please, yeah. I mean, ensure they don't confuse. 600,000 plus maximum stock level is how much? 1,000, isn't it? And then everything we divide by 2. Everything we divide by 2. Everything we divide by 2. We divide everything by 2. So how many units are we getting? So you take 600,000 plus that equals first. Whatever answer we get, we say divide by 2. Inakuja ngapi? 882,500. Thank you so much. So right there in bold capital letters, economic order quantity. Economic order quantity. So economic order quantity, EOQ. We have just said right now that economic order quantity is that reorder quantity, which minimizes inventory costs. Yeah, it is that reorder quantity that minimizes reorder. It is that reorder quantity. It is the reorder. It is the reorder quantity that minimizes inventory costs, i.e. ordering plus holding costs. Yeah, so it minimizes ordering and what here? Holding costs. So let's capture this in form of a graph. We capture this in form of a graph. Can I rub this? I have my board being very, very small because of the camera. Yeah, I can only write on a very tiny spot for the online students to see. So graphically, yeah, welcome to Kenya. Do we have a chair? All right. So graphically, we have those costs that increase as the quantity that we bring on board increases. Those costs, we call them costs of holding stock, holding cost. Good examples will be rent for storage space. Yeah, rent for storage space. So the more we bring in goods, automatically the more the space we need. So rent will increase. Yeah, and ladies and gentlemen, this holding cost, to get holding cost, what shall we be doing? To get total holding cost, this is the formula we shall be using. Total holding cost. We shall be taking average stock times the HC. Anytime they want us now to give them total holding cost, you can see, yeah, it's a direct expense. The more the quantity, the higher the holding cost. It will be Q HC over 2, where HC is holding cost per unit per year. Holding cost per unit per what year? Per year. That is HC. Holding cost per unit per year. Great. And then we have what we are calling ordering cost. So this ordering cost, ladies and gentlemen, the bigger the order we have at once, it means what? You're going to have fewer orders in a year. So assume we have an annual demand. If we have an annual demand of, say, 30,000 units, and then we say, you know, we can't bring all this at once, we may not have space. So we say, what if in this case here, our Q is 15,000? So then how many orders are we going to have? Number of orders, somebody. Yeah, you can see in this case here, the annual demand is 30,000, and every time we acquire, we are buying 15,000. So see, we'll bring the first 15,000, we deplete, we go for the second 15, we exhaust the 30,000. So in this case here, the orders will be what year? 2. What if our Q was to be 10,000? Smaller quantity acquired at a time, our orders will increase. So to get number of orders, we normally take D divided by Q. Yeah, and in this case here, the bigger the order size, the bigger the number of units you order at the same time, then automatically the fewer the number of orders. That is why the ordering cost is inversely proportional to the quantity. Quantity is increasing, but the order cost is going down. Because if we decide, and we have enough space, instead of us in this case here asking for a few units, we can decide in this case here, let's acquire 30,000 at one, and then we just bring in all of them. What would that mean? If it's a lorry bringing, only one lorry brings. So we are ordering only one slide instead of ordering many times. So the most important thing for you right now is to appreciate the formula of getting, in this case here, the total Ordering cost. How do we get total ordering cost? Total ordering cost. So to get total ordering cost, we normally take D over Q, number of orders, times CO. Number of orders times what here? Times CO. Number of orders times CO. Have they shown you like, you've missed 1.5 classes? We shall overcome. We shall overcome. So anytime they want us to get total ordering cost, we shall take number of orders times CO, where CO stands for cost per order. So write there that CO stands for cost per order. Cost per order. So then I would want you to do me a favor. I would want ourselves, ladies and gentlemen, in this case here, to come and fix something here. Our total cost. Draw something like this. This is total cost. Our total cost profile. Our total cost profile. And this total cost, I would want you to see something very important, that this is what we call minimum cost. Minimum cost. Here, the very lowest cost. The very lowest cost. And this lowest cost is the best cost for our farm. This is the one that will lead to what we call economic order what here? Quantity. This is what will lead to what we call EOQ. See, we have many quantities, but should we acquire the one that leads to minimum cost, then we enjoy what we call economic order quantity. We enjoy what we call economic order quantity. So I would want to know whether you've been able to draw this. The online students, if you've been able to draw this, can you kindly put your thumbs up like this? The online students, have you been able to draw this? All right, thank you so much. Then if that is the case, I can very comfortably rub this. But before I rub, it means something very coincidental here, that at EOQ, ordering cost and holding cost will always be the same. The same. At EOQ, holding cost and ordering cost will always be equal. So we are saying something very important, my good students, that any time they want us to give them EOQ, EOQ will always be at EOQ. Mention that at EOQ, ordering cost will always be equal to who? Holding cost. And this I would want you to highlight. Do you have highlighters? Yeah, when I come next, I should be able to bring you guys highlighters. The only thing you need to tell me is whether you belong to UDA. I bring you yellow highlighters. Or which colors would you love? Huh? Green. For which party? For which political party? Azimio, eh? Okay, no worries. When I come, I'll bring a variety and then you choose. Those are the benefits that physical students can get, which the online students can never get. Great, great. Now, mention there the EOQ formula. The EOQ formula. The EOQ formula. The EOQ formula. So the EOQ formula, we've just said here that at EOQ, ordering cost equals what here, somebody? Holding cost. And then ordering cost, we know the formula. It is D over Q, right? CO equals holding cost, which is on the basis of average stock, HC. So can you kindly do me a favor? Make Q the subject of the formula. Make Q the subject. Make Q the subject of the formula. So if you make Q the subject of the formula, abracadabra, let's cross multiply. If you cross multiply, this will come here. So this will be 2DCO equals Q squared. Because of Q times Q. Hata hawajaona hii cross itakuwa Q times Q, ni Q squared. Yeah, HC, isn't it? Yeah. And of course, I would want Q to be on this side, so I can interchange this comfortably. I can say it is Q squared HC equals 2DCO. I can just interchange this in comfortably. Because even if I was to introduce a minus, it will be here and the other side will be cancelled. Ah, great. So I want to be left with Q alone. So if I want to be left with Q alone, abracadabra, what should I do? I will say Q squared equals 2 DCO over who? Over HC. Meaning that Q will be the square root 2 DCO over HC. Is that okay? 2 DCO. Because you see, this is Q squared. So when it goes to the other side, it becomes now what here? Square root. It becomes square root. And this is the formula I came to sell to you here today. You may forget about all the other things that you've spoken about, all the other things like miniskirt we have spoken about here, forget about them. But you shall always remember what here somebody, the EOQ formula. So this EOQ formula, I would want us to highlight it and write it very well. I would want us to highlight it and we write it again. But now we shall call it economic order what here? Quantity. So economic order quantity will always be equal to square root of 2 DCO over what here somebody? Over HC. 2 DCO over HC. So then I would want us to use the same example illustration that I've just given us, the one which we have used to get the stock levels. We calculate the EOQ. And as we do that, it will be very important for us to know that this is annual demand. Annual demand or annual consumption. CO is cost per who? Per order. CO is cost per order. And then we have HC, which is a holding cost per who? Per who? Wongo. Per annum. So it is per unit and then per what year? Per annum. No worries. We shall overcome. We look forward to seeing you next week. Yeah. We also have some other class on Saturday and I will be around. If you can't make it over the weekdays, yeah. So holding cost per unit per annum. Great. So then we go back to this question and then we tackle it. We go back to this question and then we tackle it. Yeah. So this question, I wish I gave it a name, but it has a name. It has a name. It is smart options, isn't it? So we are calculating EOQ for smart options. So for these smart options, they gave us demand for each month. And I want annual demand. And you guys were able to add, if you remember very well, for smart options, you great students of mine were able to get the annual. Do you remember the annual demand? You added, isn't it? When you are getting average, you came and added. So in this case here, the annual demand equals who? Oh, I'm alone, but I will overcome. I'm alone, but I will overcome. Annual demand equals who? So there is a good student here who is telling me, Mwalimu, annual demand, I can remember it. They are telling me that it was 2.4 million. Oi, 2.4 million, isn't it? So in this question, have they given me cost per order? In this question, have they given me, read the notes. Tell me those notes, whether you're able to see the cost per order. 40, eh? Ah, great. Easy. Management accounting is for management accountants. The easiest paper, best paper in CPA. Yeah. Note number 7, ordering cost is 40. How about holding cost? So the holding cost, in most cases, they will give it to you in the form of a percentage. So it will be a percentage of the price. So the holding cost is 20%. So then it will be 20% of the price of the cash tied up. So 20% of the buying price. Buying price per unit. So it will be 20% over, is there anybody who is able to see the buying price per unit? 60, yeah, 60. So 0.2 times 60 will end up giving me what figure? 12, eh? 12. So meaning that this will be the square root of 2 times annual demand. Annual demand is 2.4 million times cost per order. Cost per order is 40 all over 12 bob. So remember, you shall start with whatever we have under the square root. That's like a bracket. So you take your calculator, say 12 times 2.4 million times 40 divided by 12. Whatever answer you get there, you say square root, square root. Whatever answer you get there, you say square root. Oh, I'm writing without showing my board. Very bad, very bad, very bad. I'm writing without showing my board. That's very bad. 4,000 there. So we have here 4,000 units. So up to here, do you think you are able to follow? Yeah, please give me a response. Do you think if it comes to an exam, you'll be able to get something? That silence is so loud. Looks complicated, eh? No, no. Yeah, the online students, what is your response? Are you able to follow? Are you able to follow what Mwalimu has done? Online students, please. At least I can see George saying yes. KJ, Miss Wambua, great. So then the examiner will ask you for total cost. How do we get this total cost? So this total cost will be the purchase cost plus ordering cost plus holding cost. Yeah. So anytime they ask you for total cost, not total relevant. When they call relevant, they want these two only, this and this. I'll be able to explain that. But here they want total cost. Now, can I ask you, great students of mine, a question? We used to have the late Mwai Kibaki. He used to belong to some political party. Are you able to remember the name of his political party? Mwai Kibaki. Chungwa. Deep, isn't it? Yeah. So in this case here, Mwai Kibaki's party, DP, will give us purchase cost. Annual demand times per. Ordering cost, we know the formula. It's D over Q, CO. Holding cost, we know it's Q over 2, HC, like that. So anytime they want us to give them total cost, that formula will come in handy. DP. That formula will come in handy. So do we know the annual demand? You guys gave me the value. Was it 2.4 million? So 2.4 million. 2.4 million times, in this case here, the buying price. Remember, this is buying price, eh? You gave me a value for buying price. It was coming to how much? Wait, they're not talking to me. It was 60, isn't it? 60. This is the same annual demand, which is 2.4 million. Divided by Q, of course, is what we are going to acquire. The EOQ. Which you guys have given me as what here? 4,000, isn't it? Multiply this by cost per order, which I remember my brother at the back told me is 40. Cost per order is 40, isn't it? Yeah. Plus Q over 2. The same quantity we are acquiring. 4,000. 4,000 over 2. Times the holding cost. What is the holding cost? 12. So I want you to be very patient with me and give me this answer separately. Tell me what is this purchase cost. So 2.4 million times 60. Tell me what is this purchase cost. Quite a huge figure, right? How much? 144. 144 million. Please, with your patience, go ahead and give me the ordering cost. These are the ordering cost. Go ahead and give me the ordering cost. 600,000. 600,000. If you are correct, this other one must be what here? 600,000 if we are correct. Because at EOQ, ordering cost must be equal to, there are questions that you can even mark for yourself in an exam. Yeah, you can just finish. And if you get that they are not the same, take a red pen and put a wrong to make the work of the examiner easier. Yeah. So somebody is saying that this is wrong, right? You are sure? Times? So this is 2.4 million divided by 4,000 times 40. It's supposed to be 24,000. 24,000. 24,000, 24 million. 24,000, eh? Yeah. So this is supposed to be 24,000. So meaning that even this one must be 24,000. Is that the case? Yeah, because the holding cost will be equal to ordering cost in an EOQ model. Then in this case here, what is the total cost? sorry, yeah. You're not happy today. You can't see. Oh, is it far or okay? Sawa. So next time I will be very careful. Has it happened like that throughout? Feel free always to tell me. Yeah, great. The online students are not writing anything. The online students, what are you getting as your total cost? At least I can feel, I can hear the physical students. Yeah. So 14, 40, 48,000, isn't it? Yeah. So then I want us now we have finished this area. So now we go to our past papers. We tackle the 4 questions. We go to our past papers. So the questions we are tackling, yeah, you can see them there. Yeah, down. April 2022, question 2B. April 2022, question 2B. Question 2B, that is April 2022, question number 2B. We have August 2024, August 2024, question number August 2024, question number 2C, question number 2C. And then we have in this case here, December 2023, question 1B, December 2023, question 1B. Yeah, and then lastly, for today, it is April 2025. April 2025, question number 4A. Question number 4A. So have they gotten the first question? We tackle it right away. Once you get it, please screenshot it, send it in our WhatsApp group. We want to tackle this April 2022, question 2B. So we start with April 2022, question number 2B. Again, remember as you do these exams, speed is of essence. Speed. You need to do them at a high speed and, of course, very accurately. So you're told the following data relates to a particular stock item of Magala Limited. The company's management is in the process of setting its stock levels as a way to address the escalating stock handling costs. The following information is provided. We have normal usage per day, minimum usage per day, maximum usage per day, lead time, economic order quantity, which they have already calculated for us. So they want us to give them reorder level, reorder. We order the sweets, reorder level, reorder level. So we know this is MM, isn't it? Maximum consumption times maximum who? Lead time. So in this case here, what is the maximum consumption? It's written there, maximum usage per day. Thank you so much, 1400. How about lead time? They've given us lead time in the form of a range. They've told us it's 25 to 30, but I want the maximum. 30 days. So then are you able to, if you get this wrong, every other thing will be wrong, unfortunately. Unfortunately. 40,000. For 2,000. So you write there units. So is that okay? So from there we go to the maximum, right? So we have here maximum stock level. So maximum stock level, what do we do? Roll and rock. So can I rub this? No, okay. We roll and rock. Management accounting is the best subject in CPA. I've never understood why 80% of the students who attempt this paper fail. I've never understood. Never. I'm yet to understand why. To me, this is a paper I can get 100 over 100, everything. Easy, easy, easiest. So now we are calculating maximum stock level. So maximum stock level, we've said it's a roll and do what here, somebody? And rock, isn't it? Reorder quantity. And then to ensure it's maximum, we must in this case here use what here? Minimum is inside here, isn't it? Minimum stock level, no. Minimum consumption times minimum lead time, yes. So then are you able to see the reorder level, the one we have calculated up there? Reorder level is 42,000. So we have here 42,000. How about reorder level? Reorder quantity, I mean? Reorder quantity is 50,000, isn't it? So plus 50,000 minus minimum consumption. Are you able to see the minimum consumption per day? 500. Are you able to see the minimum lead time? 25, 25. Put in the brackets, give me an answer. Put in the brackets and give me an answer. Mm-hmm. $79,500. And of course, in an exam, you guys would have gotten this right. Yeah. So then we can go straight away to the next one. The next one, they are calling it what here? Minimum stock. Yeah, level. So for minimum stock level, what do we do? Yeah, we roll with the miniskirt, isn't it? We roll with the miniskirt. Hooray! We roll with the miniskirt. But the moment we do that, we become average, isn't it? So minimum stock levels, we are rolling with our miniskirt minus, in this case here, average consumption times average lead time. Yeah. So in this case here, do we have our reorder level? Ziko ngapi hizo reorder level? Reorder level ni ngapi? Woi, niko peke yangu lakini I will overcome. Minus, in this case here, average. Average consumption is the same as normal consumption. Is the same as normal. Are you able to follow? Leo umenyamaza sana. We shall overcome. We shall overcome. We shall overcome. Yeah. So normal consumption ndio average, isn't it? Ambao ni ngapi? Times average lead time ambao ni ngapi? Yeah, average 28. Aki uongo. Uongo. Hakuna wewe. Kwa always round off to a whole number. Utanyoroshwa. So 25 plus 30 divided by 2. So they've got 27.5. Yeah. Yeah. So average lead time. Don't say that these are days that we can't have a half a day. Who told you? Even hours we have. Yeah. So 42,000 minus open brackets 1,100 times 27.5. You close brackets and then you tell us what is our minimum stock level. 11,750, isn't it? 11,750. And then lastly, they want us to do the very simplest. They want us to do the very simplest, which is averaging, isn't it? So average stock level, you'll take what divided by what? What plus what divided by what? Yeah. Minimum plus maximum divided by 2. So we have here average stock level is minimum plus maximum. Yeah, divided by 2. Remember, it's minimum stock level, maximum stock level. So the minimum stock level I can see it is 11,750. What was the maximum stock level? 16? 79,500. Whatever total I get, I divide this by 2. Yeah, whatever total we get, we divide this by 2, which gives us 45. 625. You say units and then you get everything. So now after you write like that in an exam, now at the bottom of your booklet, you can now tell God to bless the work of your hands, isn't it? Because at least you've done something. This paper, whenever we mark it, you'll get so many students writing there, God bless the work of my hands. But at the end of the day, they have not written anything. Is that okay? It becomes an international disaster. Is that okay? Okay, so anytime we're writing it, we really get so many students writing that statement. Of course, God will help you, but if you've done something, isn't it? So August 2024, August 2024, Where is this August 2024? Yeah, August 2024, question number 2C. August 2024, question number 2C. 𝐭𝐻 Limited. Are we there? 𝐭𝐻 Limited. You can send it on WhatsApp if you don't mind. You can send it on WhatsApp if you don't mind. So we are told there 𝐭𝐻 Limited had a weekly minimum and the maximum consumption of materials Q at 250 and 750 units respectively. The reorder quantity as fixed by the company is 3,000. The materials received within a period of 4 to 6 weeks. That's lead time, isn't it? From the date of issue of supply order. Required minimum stock level, maximum stock level. So is this a question you guys can attempt later? I think so. But you see, you must calculate roll. Because there is nothing you can do in stock levels without roll. Even if it's not asked, reorder level must be calculated. So first of all, you calculate reorder level, and then now you calculate minimum stock level, and then what here somebody? Maximum stock level. So many students like now after exams, they'll call me. Then they tell me, well, you taught us very well, but now we got a simple question like this, but it was not asking about roll. It was not asking about reorder level. Mina mwambie ni error, especially if it's a December sitting, No December now, the Christmas festival. Namwambia ni error exam. Lakini unajua menyoroshwa. We shall overcome. We shall overcome. We shall overcome. Yeah. So taangalia answer zenu kwa WhatsApp. All right, ladies and gentlemen. December 2023, question number 1B. December 2023, question number 1, boy. Once you get it, say hooray. December 2023, question number 1, boy. December 2023, question number 1, boy. Are we there? Oh, they are not talking. Are we there? December 2023, yes. So now, ladies and gentlemen, we are told there, Godoro Limited supplies high-quality mattresses. The company outsources these mattresses from a supplier in town. Godoro Limited estimates that their total inventory holding cost of mattresses per annum is as follows. So I can see percentage of purchase price per unit per annum. That tells me that the holding cost percentage is 15. Ukiona any percentage which is a percentage on the purchase price, that is a holding cost. So the holding cost percentage down there is 15. I don't want to know the constituents. I don't want to know those constituents. Additional information, the annual sales demand for the mattress is 480 mattresses. Each mattress costs 4,000 to purchase from the supplier. The ordering cost is 62.50 per order. The supplier offers a 3% discount for orders of 120 mattresses and a discount of 5% for orders of 180 mattresses. So the first question they want us to do is to calculate EOQ. So are you able to remember the formula of getting EOQ? Yeah, great. Very easy. Very easy. Very easy. I know that EOQ will be equal to the square root of 2 DCO over what here? HC. So have they given me the annual demand? It's 480 mattresses. Would we be knowing what the cost per order is? Please, the online students respond like the physical students. Have they given me the cost of ordering? It's 62.50, isn't it? 62.50. And we have HC. So HC, they have given us 15%. 15%, but you see, you can't use it as a percent. It has to be 15% of the purchase price. So 15% times purchase price. So then the holding cost will be 15%. Have they told us how much this mattress is going for? 4,000. This mattress is going for 4,000. Thank you so much. So then 15% times 4,000. What are we able to get there? I hope I'm no longer blocking you fully, eh? Okay, great. Great. 600? 600. Is that okay? Now we have everything. So please come and give us this. So it will be 2 times annual demand. Annual demand is 480 times cost per order, 6250, all over holding cost of 600. So please go ahead and nimeandika juu sana. Lakini mimi ni mjanja. Nafungua lens tu. So I just want them to see. Yeah. That's much better. So please go slowly here. Say 2 times 480 times 6250. Whatever answer you get, you say divided by 600. And then at the end of the day, you say square root 500. 100 exactly. So in this case here, if you want to minimize our inventory costs, we shall in this case here procure 100 mattresses. Thank you so much, Ms. Wambua, for responding. I was fearing that the online students are not following. Yeah. Yeah. So we have answered number 1. They wanted us to give them EOQ. Na ukiulizwa EOQ, usianze kukua kimbelembele, kutafuta pia total cost. Unajua, soma swali. What have they asked us to do? They have asked us here to calculate EOQ. So wacha mambo mengi. Enda kwa next one. The cost of minimizing order size from what here somebody? The supplier. The cost minimizing order size. So remember, this supplier has given us 3 options. 3 options given by the supplier are which ones? Yeah, great. So he has given us 3 options. 3 options. The first option is we ignore the discount and the procure, EOQ. Ignore discount and the procure economic order quantity. Economic order quantity, which you guys have told me is what here? So this is option 1. Right there, option 1. Option 1. Tumwambie sisi, unataka kutudanganya mambo na discount, tuchukue vitu mingi hata hatuna space ya kuenda kuweka hizo vitu. So sisi hataki mchezo, sisi tunanunua EOQ. So tukinunua EOQ, then how much will it cost us in total? Total inventory cost. Sasa hapa unakuja sababu unaangalia option cost, unasema TC equals DP plus D over QCO plus Q over 2 what here? HC. So give me the TC of option number 1. Abracadabra, the TC. Oh yeah. The TC. Are you able to see the annual demand in the question? Are you able to see the annual demand in the question? It's given in the question there. For it, isn't it? Yeah. Remember, we are not going for any discount. Therefore, the buying price will be? Buying price will be? Aki wamenyamaza. Huh? 4,000, eh? Yeah, 4,000. So 480 times 4,000 plus annual demand 480. And you guys have given me this quantity, which is the EOQ quantity. Sinimia. How about cost per order? Cost per order is 6250 plus, ladies and gentlemen, Q. Q again is 100, isn't it? Over 2 times holding cost per unit. We had to compute it. Ilikuwa 60 ama 600? 600. We had to compute this. So could you be very, very good to me and give me this answer? So the online students so far, are they able to follow, or have they gotten a very, very fast speaking teacher? Yeah, many times they keep on telling me you speak very fast, including my own wife. She always tells me that I speak very fast. Then I tell her I'm a genius. But are you able to follow? So what is the total cost figure? 93? 1980,000. Like that. Kenya shillings, isn't it? Kenya shillings. And then we go to option 2. If we are in agreement, now we go to option 2. Option 2 now is the discounts option, isn't it? Yeah. So now we go to option 2. So please mark this cost. I will need it. Let me just write it like that. 1980. Yeah. I will need it. Then we go to option 2. So option 2 is the discounts option. So discounts option, remember discounts, they may not be the very best. What you're supposed to do is to procure the least quantity for you to just qualify for the discount. So whenever you're told that if you purchase goods between this and this, you just go for the lowest quantity, which will enable you to get the discount. So in this case here, procure the least quantity, to obtain discount. So like in this case here, they have told you that you will get a discount of what percentage? A discount of 3% if you procure how many units? Yeah, at least 120. At least 120. So 120 or more. Yeah. So in that case here, then we make a decision to buy the very lowest to just get that 3% discount. So i.e., we procure how many now? We procure 120 to qualify for that 3%. Now, because it's a discount model, go ahead and give me the new purchase price. Give me the new purchase price. So remember, you had given me the old purchase price. Ilikuwa ngapi the old one? 90? 1920,000. Hiyo ni gani hiyo? Mattress, bei ya mattress ilikuwa ni 4,000. Hiyo 1920 ni total cost. Hiyo mattress hiyo milioni moja ni gani hiyo? Hiyo huwezi kufa ukinunua hiyo. New purchase price, so itakuwa 4,000 but now less the discount, eh? Yeah. Which gives us 3880. So now this is, yeah, 3880. Because 3% is taken off 100. 3% is a discount, yeah? So 100 minus 3% gives us 97. Now, once the price changes, something else will change. The holding cost per unit per annum. HC will change. Do you remember that HC was a percentage of price? The holding cost was 15% of 3880. So are you able to give me this figure now? Thanks, Miss Wambua. 582. Have you rounded off? Don't round off. Don't round off. 582, right? All right. Then go ahead. Don't look for EOQ again. Now we know the quantity to buy. So go ahead and give us the total cost, which is DP plus D over Q, CO, plus Q over 2, HC, like that. So now you have everything. Just go and substitute. Now you have everything. Go and substitute. Okay, we move slowly here. What is the annual demand? Annual demand of mattresses? 4,800 of 480, yeah? Times the new price at 880. Annual demand is 480. This time around, what is the quantity? 120 for us to get the discount. 120, isn't it? Yeah. Cost per order won't change because you have a cost per order will always remain the same. The same, yeah. So what is the cost per order? 6250, isn't it? 6250, yeah. Plus, in this case here, Q over 2. So 120 over 2, isn't it? Times HC. What is the HC? 582, isn't it? Yeah. So please give me the total cost for this one. Mhm. So you just use your calculator once. You say 480 times 3880 plus 480 divided by 120 times 6250 plus 120 divided by 2 times 582. Then you give me the total cost there. 300. Just say some figure. Actually, if you don't have a calculator, you're always the best placed to guess any figure. You can even say, my answer is 0. Then they'll say, no. In the process, they end up giving us the correct answer. 1922, 320, 1922, 320. Do we have any other option? Yeah? 0. Okay. Oh, you're practicing what I'm teaching you. Very good. No. We have another discount offer. Read the question, you'll see. There is a higher discount of 5% if we procure 180. So we have option 3. We have option 3. Option 3, 5% discount if Q is 180. So I'll give you 5 minutes. You try getting this on your own. Yeah. That is a very ingenious way of getting answers from students. Tell them 0. That's a very good Christian song, eh? Very nice. When I finish the class, I'll go to sing. Justin? Okay, Justin has given me the old figure, which is okay. 19, 22. Gotten the final answer? So if I were you, first of all, I will come and get the new price because that is where things begin. Yeah. So in this case here, the new price, let's hear. So the new price, you see, I will take the old price, which was 4,000. 4,000, but now knock away the 5%, so 95%, isn't it? Which then will end up giving us 3,800. You guys are very bright. Having gotten this, what will be the next parameter to calculate? The holding cost will change because this has changed. Holding cost. Thank you so much. Somebody already has a holding cost of 570. So the holding cost is 15% of the purchase price, isn't it? 15% of the purchase price. 470. 570. 570. And then now, ladies and gentlemen, after that, what else do we need? The formula for total cost. So total cost. So total cost, you see, like now after doing this in ATD, we become the best student in Kenya. Best, because we are doing it intensively now. So go ahead and give us total cost for option number 3. So total cost for option number 3, remember, annual demand is known in advance and will always remain constant. Annual demand has never changed. So total cost here will be equal to the annual demand. Do you have it? Number of mattresses being bought in a year, ngapi? 480. Do we know this price? The price is 3,800 plus annual demand. No. Yeah, the 480, isn't it? Divided by Q this time rounding up, 180 Cost per order never changes. This is 62.50, isn't it? Yeah. Plus Q over 2. The Q is 180 over 2 times what here? HC. HC, we know it's what here? 5 cents. So I'll be very, very keen, patiently waiting for our answer for Roman 3. Don't shout 0, eh? Don't shout 0, because all of you have calculators. So then remember, we have one class, which purely we come to do CIFA questions and answers. This class normally happens on Saturday and Sunday, revision pure. Saturday morning. So whatever, if you're not able to come on Saturday morning, you attend the Sunday one. Yeah, and that is purely online, but I always do them from here. I'll be able to share the timetable with you. Yeah, so Saturday morning, if you're not able to attend that one, Sunday. If you're not able to attend both, what do? Video. So that one is pure, like we ask ourselves for the last 2 weeks, we've been doing chapter 1, 2, and 3. Yeah, so we simply go for the 2 hours doing past paper questions like that. And normally it is the one where I throw the ball to you. First of all, I see how you're dribbling, and then I take over. So I give you a question, you try. Of course, my camera is strong. I'm able to watch. That is why you'll get out of the students I normally teach 400. Yeah, all of them pass. That is what normally happens. So whatever I teach on Saturday is what I teach on Sunday. So don't, of course, if you have the time, you're young, or your obligations are few, you can attend both, isn't it? Yeah, but one is just sufficient. One is sufficient. Would you prefer to come here physically, or would you prefer to do it at home? Online, eh? Yeah, because Sunday, Sunday I should be the only one around. I should be the only one around. But if you're free, you can come over, isn't it? Yeah, like you'd love to come. I'll share the timetable. Yeah, it will be very good for you guys to give me company. So Justin is giving me what figure here? 18? 18? 91? 67, like that. So of course, we are in this world to minimize costs. Yeah, in this world, we are here to minimize costs. It's only these young people, like there is one who called me some time back after passing an exam. Akaniambia mwalimu kuja. Akaniambia kuja, napenda wanafunzi wangu. Akanipeleka Quiver. So then I realized these guys were buying, some alcohol 45,000. Paka wanapigwa makofi ikiletwa kwa me. Nyinyi ndio si cost minimizers. Sisi wazezi ni cost minima. So which one in this case here should we go for? Which option is the best? The one that has got lowest cost, isn't it? Yeah. So in this case here, option number 3 is the best. And therefore, we should go for the 5% discount. We should go for the 5% discount. Thank you very much. That's enough from me to you today. I'll share the timetable with you guys for the revision classes. Au mungetaka tumalize syllabus kwanza na tuanze revision? Tumalize syllabus yote ndio tuanze revision? No, they should go hand in hand. Yeah, we have done the first 4 chapters. We need to see within those 4 chapters, we should be very, very comfortable. All right. So yangu imetosha. I have an advanced financial management class right now at exactly 8 p.m.